So today, right now, I want to show you why I have actually become quite bullish on Bitcoin. I certainly am keeping a close eye on it, and I've actually bought some more already. Um, so let's have a look at these downtrend, these falling wedges that we've seen repeatedly now for Bitcoin since since the top over here. So looking at prices. We see, the lower highs over here, lower highs. And on RSI, we see something with these three falling wedges, including the current one, we see a very similar pattern playing out. So on the RSI, we see it coming down, and then we see another incline, but a lower incline, lower rate of incline, right? Meaning that something is going to happen. Incline and then a lower incline, all right? And here, same thing. And so the general idea here is to buy on the breakout of this wedge, which over here, as indicated by the green arrow, would be right there. Over here, it's right there. And over here, hasn't happened yet, right? Now, I do want to point out that it's possible, the way I'm painting it obviously makes it look really easy. It's very possible that you would have drawn it like this and that you might have bought at this level, which would have been a really bad idea. But I will go over, basically I can tell you straight away very simply is to set a stop loss. We're talking about massive gains here, 35, 50%. If you set like a 2 to 3% stop loss, that's, still more than 10 to 1 risk reward ratio. So it's really, you have to apply basic trading principles to these concepts. Okay, I don't know what these lines are doing here. Let's get rid of those. Oh yeah, I was trying to copy paste some arrows and things before. So bearing that in mind and looking at drawing the line like this, we saw a breakout over here. All right, so if we look at that on the chart. So the breakout of the RSI, the breakout of the RSI was right here, okay, at 8,300. And then, of course, another further indication is to look at the breakout of the price. So 8,300 is the RSI. Sorry, 8,000. Approximately 8,300. And then the breakout of the price, of course, is over here at 9,000. So those would be two indicators that could be used to buy. And then, of course, you would have had a very nice profit going up here of 35%. The next falling wedge was this one. So on the RSI, it doesn't show up so clearly. It looks more like a parallel channel. But of course, breaking out of a parallel channel is similar to a falling wedge in terms of what to look for when it breaks out one way or another. Again, we have the incline over here becoming smaller, and then what happened, we break out of the RSI as confirm. It depends if you draw it like this or like this. It's going to be either a breakout over here. This is either going to be the breakout, or you're going to draw it like that. Then you're going to have the breakout over there. Okay. In either case, the price was not very different over here, so it's not really that relevant. And here again, 47% increase, and you have further confirmation when the price, and it happens to be pretty much exactly the same line when we broke out of the falling wedge from the price as well as the RSI. Now, and of course, finally, I forgot to note is the MACD was also showing signs of bullish divergence. Now, unfortunately, on the MACD, if you had have bought over here, it would have been fairly reasonable. The MACD had, from the price of, let's see, actually, the price is so volatile here. 13.7K. And the price here, you would have seen it at 11K. Okay, so the MACD going up. There's some argument for buying there. And again, you set a tight stop loss. and you'll be fine, because as I said, the risk reward ratio is so huge here for when we finally do break out of these patterns. You're really looking for a minimum of sort of 30%, and if you don't get that, then you pretty much don't sell, or at least you sell very little on the way up, and you have a pretty strict stop loss. Yeah. And anyway, in this scenario, we didn't break out of the well, actually, to be fair, if you draw, so as I mentioned before, there's different ways of drawing these lines, and it's all in hindsight, it's easy to say, oh, we're breaking out of here, but you could very easily, let's just draw this a different color to illustrate this point. You could very easily have said, okay, well, we have a touch there, we have a touch here, we have a touch more or less over here, and then the breakout is over here, right? So if we draw a line over arrow over here, make it a bit smaller, make this the yellow one. You could very well say that, okay, well, we have a falling wedge here, we broke out here, and what's the price that you would have bought at here? It would not be good, right? You'd be buying at, oh wait, sorry, this is the price. Yeah, you would be buying 12K, and of course it came right down. So, well, actually, sorry, you would have, so the MACD indicator would have told you, if you looked at the MACD alone and nothing else, which of course is never a good idea, then you would have bought, around this area, which would, which would have triggered your stop loss. Okay, if you had have bought when the MACD over here, when you assumed that we were breaking out, then of course that would have been even worse. But and that is exactly why you should always look at multiple indicators. Okay, so the great thing about this point, for example, is that we broke out. So the different indicators are over here, that we have the MACD 1, 2, 3 lower, so 2 lower lows with prices, sorry, higher highs over here with prices getting lower lows. Two instances of that in a row. That's a big deal. Alone, that's quite a big deal actually. And then in addition to that, we have, bam, the RSI breaking out of the falling wedge, and bam, the price breaking out of the falling wedge. Okay, we have the incline here becoming less of an incline. In other words, the bearish momentum is fading, and boom, what do we see? 33% gain. So when you use all these indicators in combination, you can really get some pretty powerful, well, they become pretty powerful when combined. And so the point I'm trying to make is, A, use a strict stop loss, B, don't look at just one indicator, and C, look at as many possible indicators as possible before you make a decision, all right? So let's just take this out now. So now, what I find very interesting is that here we have not only the similar setup as we saw here, but even more powerful is that we have bullish divergence on the RSI, as well as, so here we had 3 touches, okay? Here we have 2, here we have 1, 2, 3, okay? On the MACD, we have the bullish divergence on the RSI, and note this is the daily, so it's not a small time frame. All right, if we just look at the price here, we have 6,250, close here of 6,036. Okay, so lower price, higher MACD, and of course we have the falling wedge, quite a clear, quite many touches over here on the price. And so yeah, very simply put, now the aggressive trader would already be entering trades now, which includes myself, of course. So I've already started entering a position here, and again, it's going to be pretty strict stop loss. I mean, if we break 6K again, I haven't set my exact stop loss yet, and to be honest, I'm going to keep most of what I bought now simply for long-term hold, because I'm only 50% crypto right now, 50% fiat, my portfolio. So I don't mind being 60%, 60-40 based on this indication alone. But I will certainly be adding on to that significantly if we break, if we get confirmation of breaking out of this wedge. Well, if we break out of the wedge, very simply put. So that being said, you know, it looks really nice with these pretty lines and the bright colors. But don't be fooled. There is a very possible bearish scenario, and what do I mean by that? I mean that the price could very well come down, have another leg down. Okay, let's say the price comes down to 5K, 5.2K. Well, let's just say 5K for the argument's sake. So what would happen if the price came down to 5K and touched this line around here? Well, let's have a look at what potential outcomes would happen with the RSI. So the RSI would likely fall pretty hard. Let's just take out these lines over here. The RSI could fall pretty hard, and it could break this bullish divergence that we saw over here, and it could very well even reach below this. Okay, let's have a look over here. The RSI could go and it could even hit even lower than the previous RSI. Now, I don't think that's very likely because this was 26 RSI. If we zoom out, that was literally, okay, well, since 2016 at least, that was literally the bottom. But of course, it's crypto. Anything can happen. It's a volatile market. There could be some bad news. And that, of course, would destroy the bullish RSI on the daily, which would suck. Okay, sorry. And then the MACD, of course, would likely do something. So it could come here, which would be great, you know, if it didn't even break this line. But it could do something like, you know, so lower low, and it could come all the way down over here, for example. I mean, it's unrealistic that it would break this level over here, because it just doesn't have that much time to do it. So I suppose it's just about possible that it would break that. But even if it does, okay, so the thing is that even if it does, this line might be looking something like this, okay? So it might come down over here. And this is still going to be very bullish divergence on the MACD. And again, there's different price points at which you can consider entering. One is, you know, when we're extremely oversold, you know, when you think we're at the bottom of this sort of the falling wedge. And another point is when we have confirmation of a breakout of the wedge, okay, depending again on how aggressive a trader you are. So yes, there are some negative scenarios, but as I said, even in this case where we come down to 5K, the RSI, there is a very strong possibility that the RSI just comes down to 26, okay, so we have a double bottom on the RSI, in which case we would have a 6.2K over here with a 5K over here with the same RSI, so that's bullish divergence because the RSI is not falling lower. It's extremely unlikely, more or less impossible, that we break this level over here, okay, the 172, and that means that we will have bullish divergence on the MACD. Those two factors in combination with the fact that we would be hitting the bottom of this falling wedge, around, let's say, I'm assuming that we hit 5K over here, okay, that's 3 indications. Then if you want even another one, let's have a look at horizontal resistances and support. So here it acted as resistance, here it acted as support. So those, and let's have a look at the volume. Yeah, the volume was fairly decent. We had a big hammer candle over here, so certainly a lot of price rejection from that point. And here, yeah, we had a pretty big move coming down, and a certainly very big move going up. So this is, you know, a very relevant level, I would say. If we do somehow manage to hit this exact level, you know, on the falling wedge, But that being said, because of the factors previously mentioned, I'm already entering some of my position, nothing huge, but I'm paying very close attention to the breakout of this line on the RSI and the breakout of price over here. All right, that's it for me. If you have any questions or comments, I'd like to hear them. All right, take care.